Hello viewers, welcome to my channel. If you are interested in investing in treasury bills but lack enough financial means, this video is for you. If you are seeking for an investment that promises a daily return exceeding 20%, then this video is for you. And if you are frustrated with earning less than 9% interest in your savings account, why not seize this opportunity and watch this video until the end? Now, without further ado, let us jump into this special investment called money market fund. You know, one of the easiest way for retail and young investors to access treasury bills and other fixed income instruments, it is through the money market fund. This fund pulls money from many investors and invests it in safe and liquid assets such as treasury bills, commercial papers, and certificate of deposits. Permit me to walk you through a brief history of the money market fund. The money market fund emerged in the early 1970s as a response to regulatory constraints on interest rates for bank deposits in the United States. In 1971, Bruce Brent and Harry Brown launched the first money market fund, the Reserve Fund, aiming to provide individual investors with access to high yield and short-term debt instruments typically reserved for institutional investors. The popularity of money market fund grew rapidly during the early 1970s and 1980s as it offers higher returns than traditional savings accounts while maintaining a net stable asset value of $1 per share. This stability combined with liquidity made the money market fund an attractive alternative to bank deposits. Today, the money market fund remains a key component of the financial system as it provides investors safe and liquid options for parking cash while earning modest returns. They continue to evolve in response to regulatory changes and market conditions. Before moving forward, kindly hit the subscribe button and also give this video a like. Thank you very much. Now, let us get into how the money market fund works. On my screen, you will see the daily earnings calculation. How do you calculate the daily interest rate? The daily rate is equals to annual rates divided by 365 days. For example, as of February 4th, 2025, the interest rate was 21.49% per annum. The daily rate would then be equal to 21.49% divided by 365 days, which is equal to 0.0589% per day. If your intended capital or principal is 2 million naira, if you want to invest 2 million naira, how do you get to know your daily earnings? It will be the 2 million naira times what you have as your daily rate. And from calculation, our daily rate is 0.0589%. Multiply it by 2 million. Thereby you have 1,177 naira 0.53 kobo per day. In the next 3 months, this forms your accrued interest and will be paid to you as your dividend. The annual interest rate is subject to change. Like for today, if the interest rate today is 21.49%, tomorrow it can increase to 22% the next day. However, the rate will not go below 19% at any point. Adding your funds, let's say for instance you invested 2 million naira and you want to top up your investment. Your top up amount is 100,000 naira. If you add 100,000 naira 2 days later, your new investment balance becomes 2,100,000 naira. Your new daily earnings will be recalculated based on the current rate. For example, if the rate is 21.49, it will be your 2,100,000 times 0.0589%, which then will give you 1,236 naira 0.41 kobo per day. So this value, 1,236 naira 0.41 kobo per day, will be your daily returns. Your withdrawal funds. Alright, I want to withdraw my money. What happens next? If you seek or you want to withdraw or sell some units, the daily earnings will be recalculated based on the new balance and the current rate. For example, if you withdraw 500,000 naira, your new balance becomes 1.6 million, that is 1,600,000 naira, and your daily earnings at 21.49% will be 1,600,000 naira times 0.0589%, which will equal 941 naira 0.64 kobo per day. Here are the key points you need to note about the money market fund. Number 1, your principal is secured. Earnings are calculated daily based on the current investment balance and the prevailing interest rate. The annual rates vary daily but will not fall below 19%. Just get that. It will not fall below 19%. Any top up or withdrawals, we immediately adjust the daily earnings accordingly. I already did the manual calculation myself. Example of the scenario what you will have for different rates and different amounts. For February 4th to 6th to 7th to 10th to 12th, as of 19th of February 2025, the rate was 22.29%. In conclusion, if you are saving for an asset or education or for financial freedom, the money market fund provides a smarter way and a more rewarding way to grow your wealth. So you can start your investment today by visiting any commercial banks, but for the sake of this video, I will recommend Stanbic IBTC Bank and Fidelity Securities Limited to start your investment. You can start as low as 5,000 naira. Also note, your principal or your investment amount is highly secured. Cheers.